Hey traders, Clifford, the 25-year trader here, back with another video. Wanted to do a quick midweek market update here, and I'm also going to do some other updates in the future on Sunday on my YouTube channel as well. Do like a Sunday update as well as a midweek update on Wednesday. So real quick, just a couple markets to look at here. I look at the futures market, but again, this would apply to any other stock index. We're looking at the S&P 500, and in my opinion, it's even with the everything that's happening with the war and everything, it's pretty much holding support. And I'm watching this level right here, 67.72 on the S&P. See how here it rejected it, rallied. Here again, rallied. Here again, rallied. Yesterday again, rallied. So in my opinion, that's a significant level to watch, that buyers are stepping in. So if someone is bullish the S&P, you basically this is a good area to consider entering a long position. And usually I try and put my stop out of harm's way by below support, maybe like below here somewhere or something like that. So like I would enter bullish here on the touch of support, and then maybe put a stop like usually like 35 points away, and then aim for a profit of maybe 70 points or something like that. Like if you're risking 30, try and get 60. If you're risking 35, try and get 70. Always go to for 2 to 1. If you're a day trader, I don't day trade as much, but actually if you're a day trader, it's a great strategy because you buy at support and you risk maybe 30 points, but by the time it rallies, you'd be up like 60. So it's like 2 to 1. And as long as you get 50% of the direction, 50% of the time the market moves in your favor, you're gonna be profitable. However, if you are bearish the S&P, I don't think right now, showing so many signs of support, it's a good idea to short it unless you see a close below this support level, 67.72. And look at what happened yesterday. It tried to get below there, but it couldn't close below there. And that is why I always recommend, um, that you want to look at the open and the close. Forget about what happens in the middle of the day, because this is like a shakeout. This is like people get stopped out here, and then the market does what it's normally going to do. But see, if you got like, let's say we had a real close here at 4 o'clock, then yes, now I would say, you know what, this thing looks like we're going to head towards a larger pullback, and then I wouldn't sell the close. What I would do is wait for the rally and look for rejection back at resistance 67.72, and then I would enter short, and then maybe put a profit target at this support level down here. And of course, again, if you're going to short, put the stop above the highs, right? So that's about it. That's all that's going on that I see there. Over on the Nasdaq, looks like similar situation. Support held here, 24,400, held here, 24,400. Strong level of support. On the Russell 2000, same thing. This level is 2580, looks like 2580, 2580, 2580 holding. So again, similar ideas there. Over on the commodity sector, real quick, let's flip over there. Definitely the war, as we all know, is affecting oil prices. And I was watching this. Oil had been channeling for about 1, 2, 3, 4, about 6 months or something like that. And you see this breakout, but then there's a gap. So what I believe usually happens when you see gaps like that, normally the gaps get filled. So if you were going to try and buy oil, you probably want to try buy at this support level around here. This is the futures contract, but you see the gap is still there, 66.57. This is the CFD, so similar, but 66.70, whatever. That'd be a good place to get bullish. And then again, try to put your stop below support, maybe down here. Um, and I wouldn't if and that's what I see in oil there. Looking at gold real quick, just kind of consolidations. Usually when wars and fear enter the market, you usually see gold rally hard, but for some reason it's just kind of consolidating. Same thing with silver. Over to Bitcoin real quick. I didn't see much. there. Looks like it might be fishing for a bottom. Just keep an eye on that. And then in the currencies, not a whole lot going on either. We're seeing weakness in the currencies right now, and a lot of it has to do with the flocking to the dollar. They call it a flight to quality. So like when the world's in fear, sometimes investors will flock or fly to certain asset classes, and one of them is the U.S. dollar. That they call it a risk aversion. So when risk aversion hits the market, they flock to the dollar. They call it a flight to quality to the dollar. They could also flight to quality to gold. They could also flight to quality to bonds or the yen or whatever instrument they choose. It looks like this time they chose the dollar, and that's a risk aversion market. And then eventually you get risk appetite where, they'll start buying the riskier assets versus selling them. But yeah, not too much happening in the currencies. I'll keep an eye on those. And I think, yeah, that's about all I see for now. So if you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next one. And also check me out on YouTube for my Sunday market open update at 6 p.m. Eastern Standard Time. Look forward to seeing all you guys in the next one. And as always, my friends, trade what you see, trade well.